Hi there everyone, good afternoon and welcome to Market Fatafat. I'm Avan Dabash, with me Vinny Motiwala, and we've got a stellar show lined up for you as we'll take you through all the movers and shakers in trade this afternoon. Well, let's kickstart the show then by telling you how the markets are shaping up. And for now, though, it continues to remain in consolidation mode with a slight bend towards the negative terrain. We're at the lowest point of the trading day and it's 18,121. Not something that's been entirely unanticipated given the fact that we have been managing to hit the 18,400 mark in the past few trading sessions. It's the small cap index. It's the only one that's managing to hold out in the green, although by the skin of its teeth, because the Sensex 2 is down 583 odd points. Media, real estate, IT, PSU banks, not to mention the Nifty Bank Index as well. Those continue to languish under pressure and pretty much every sector is down and out. Within the frontliners then, just going to take you through some of the key drags. Kotak Bank at the top of the heap there. It's 2.5% gash. There's HCL Technologies as well. That's down and out. Asian Paints, TCS, Infosys dragging the IT index down. Bajaj Finance as well. Bajaj Finserv and Tata Motors. To some of the other stocks that are in focus this afternoon, Jubilant Food came out with its quarterly numbers just a short while ago actually. Close to a 60% fall in their Q4 net profit to about 47.5 crores. The stock has, by the way, recovered quite smartly. There's been something like a Metropolis Health came out with its numbers as well, where revenues have declined about 1% or so and profits have come in at 33 crores. Devyani International, it's been a 20% fall in their net profit. So that too has been a stock that's in the spotlight in trade. But Vinny, we've got lots lined up today.
Absolutely, lots lined up. All those stocks that we will be talking about either on the back of news flows or technicals. On the technicals, today we're joined by Sumeet Mulchhandani, while from the research team we have Harsh as well as Vamakshi joining in with us. A very good afternoon to all three of you all as well, and very good afternoon to you as well, Avan. I'm going to be starting with the first stock for today, and let's talk about JK Paper. This one is in focus on the back of its earnings. When you look at the stock, it's bit sluggish in trade today, not doing anything exciting, down 2% in trade on the back of a weak numbers that was reported by the company. Realizations, that's a concern that is coming in for JK Papers. Other than that, when you look at it in terms of the revenue, yes, the revenue saw an uptick of around 4 to 5%, while in terms of the operating performance, clear weakness there because margins have contracted by 1,800 basis points. Then margins, EBITDA margins have come in at 28.1% versus 34.4%. Profits too down by 15%, EBITDA down by 14.5% as well. Clear weakness is what we are seeing coming in for JK Paper, and stock is down 2.26%.
Alright, let's shift gears then and move away from JK Paper to another result candidate. I just flagged off Jubilant Food. Let's talk about it in greater detail. That stock has recovered as well in trade, and the company has delivered revenues as well as margins in line with what the street was expecting. So revenues have come in at about 1252 crores. That's up 8.2%. You've got the margins at 20.1% versus 25% last year. The company has delivered a lower profit this time around, largely due to an impairment charge of 20 crore rupees in the quarter. Meantime, the EBITDA number has come in at 252 crores, down nearly 13%. Revenues on a standalone basis, as we highlighted, has grown about 8.2%. Meantime, the company has said that Sri Lanka has managed to sustain inflation, depreciation of currency, as well as depletion of forex reserves. The company has opened close to 61 new stores in India, and you've got, in terms of their overall, in terms of what the company has delivered in terms of the channel mix, the dine-in has been about 36.4%, delivery at about 63.6%. So that's Jubilant Food currently quoting at the highest point of the trading day at 475.
Okay, let's move on and pull up the charts for Bharat Dynamics. Sumit, that's the first stock that you're going to talk to us about on the charts. Should we be keeping an eye out on in terms of the levels here? Are you expecting a run up here?
Hi, good afternoon all. So from the last 2-3 sessions, if you will see, the defense stocks are in buzz. So BDL looks good, and it is giving a fresh breakout also. In the first half today, it was almost up by 4%, but as the market was dragged today, so some profit booking is there, but still it is in the green zone, and we are expecting the more upside here. There was a resistance zone of nearby 1010 and 1020. So 2 to 3 sessions prior also it has given a good breakout with the volume also. Today, if you will see, it is a highest volume in the last 15 to 20 sessions. So we are expecting the more upside till the levels of 1175 and 1267. one can keep a stop loss of around 970 here.
Okay, there you have it. That's Bharat Dynamics' clear focus on the defense space. Vamakshi, let's discuss the ET Now newsmaker almost, if you will. Of course, it's been a healthy set of numbers, and then we interacted with the management, Kaynes.
Well, absolutely a high flyer in trade today. When you look at the revenue, that did see an uptick of almost 53% on a year-on-year basis. EBITDA has also gone up by 50%, but it is the profit number that has come in almost at, in fact, it has almost doubled from 20 crores to 41 crores. The margins, however, have seen a slight bit of contraction from 16.6% to 16.2%. The order book for the company is looking quite healthy. It stands at 2,648 crores. The net debt has also reduced from 148 crores in March of last year to 48 crores right now. Net debt to equity has also gone down consecutively. The management says that the industrial as well as automotive segment are driving good growth. They're expecting the railway segment to perform better. They are quite confident of achieving their FY24 revenue target of almost 1,700 crores. They're expecting operating leverage to play out in FY24, and in fact, from here on, they're expecting their PAT as well as EBITDA increase. So on the back of a strong set of numbers and good management commentary, the stock is soaring away in trade today, as you can see, up nearly 13%.
Okay, also, like Aman was mentioning, we did speak to the management on ET Now as well. We were joined by Ramesh Kannan, MD at Kaynes Technology, as well as Jairam Sampath, the CFO at Kaynes Technology, talking about their numbers, what should we be expecting from the company. Let's go across and listen in.
Next 4 to 5 years, it is all manufacturing in India. So if we can gear up ourselves, we are there. This physical, we will do around 25 crores of benefit, but the real benefit will come in the next year because our products are just getting finalized with our customers and we are in the last leg. So maybe from the next quarter onwards, small billing will happen, and going forward, it will increase in the last 2 quarters.
Essentially, our order book is quite balanced. It's not changed much from in terms of composition from what it was 1 quarter ago. But in terms of new RFQs, we see that new RFQs are in all the areas. They are in EV area, they are in industrial area, they are in IT area, they are in medical area, and also railways. So I would expect that both PAT and the EBITDA margins will be higher than whatever we have posted so far.
All right, let's get a move on then away from that buzzing stock to another one that's in the spotlight, Harsh, and that's Chemplast.
Well, yes, Avan. So we've seen a good, solid quarter coming in from Chemplast Sanmar. Even though revenues largely have been on the decline, 4% lower on a sequential basis, we're seeing EBITDA actually go up around a solid 24% higher when I'm looking at it sequentially. So EBITDA came in at 97 crore versus a 78 crore number. Margin pressure, of course, continues to remain on this particular player. When you're looking at EBITDA margins, though, gone up from 6.6% to 8.5%, around almost a 200 bips increase on a sequential basis, and you can see the impact of that on the stock, 3% higher in trade today when we're looking at profit after tax, therefore up 70% on a sequential basis from the 27 crore low to around 46 crore currently. That's where we're at when it comes to Chemplast.
Okay, that's Chemplast for you all. Keeping an eye out on that stock as well. Let's move on and talk about a private bank. And Sumit, you've picked out Kotak Bank from this space, a large private bank. When you look at the charts for this one, obviously at one point in March it corrected to as much as 1,600, gone up from those levels. But today also a bit of a fall that is coming in for Kotak Bank. How should we be viewing the charts for this one? Would you say it's the right time to actually pick Kotak Bank?
If you will count, this is the 5th time it is getting the rejection from the same zone, you can say. The zone is between the 1960 to 1980 from the December 2021. This is the same. And if you will see the yesterday's daily candle, it is a type of bearish engulfing. And today we are getting the follow-up also. So important level was 1950 as per the yesterday's closing, and today got the follow-up. So still it looks weak. It is trading on the day's low and one of the highest loser in the F&O section also. So we are expecting more downside here. There is a gap between below the 1830 levels. So stock first we expect 1875 levels, and more downside is there if they're able to close below the 1830, more downside will be there. So if anybody is holding, we would just advise to book some profit here or exit in the loss also, because sometimes to save money is to earn money. If we see the chart is bearish, so better is to exit at that time.
Okay, let's move on, and the next stock that we're going to talk about is Jindal Steel. Now, this one is on the back of its numbers as well. When you look at the of the company, we see a decline coming in terms of the revenues of the company. It is down by almost 5%. Other than that, even the EBITDA performance has not been anything exciting. The operating performance has been quite weak as well. Look at the EBITDA, that is down by 29%. Even the margins of the company have seen a sharp contraction, 16% versus 21.4%. So almost a 2,500 basis point contraction in terms of the margins of the company. Bottom line too obviously is impacted, 80% decline in terms of the bottom line of the company. So clear weakness is what we are seeing coming in, and Jindal Steel as well post its numbers. Nothing exciting there. Stock is trading almost at the day's lowest point as of now.
Yes, indeed. Let's discuss the fundamentals and technicals too then, and Sumeet. Yes, today the stock is under pressure, but even if you go by the 6-month chart or on a year-to-date basis, the stock has declined about 10% or so, and it's been in this very tight range. When do you see some sort of a breakout?
4 to 5 sessions prior, when it has to cross the previous resistance of 600, but it failed and formed an inverted hammer type of formation. That is the most bearish sign, if we say. And we got the follow-up yesterday. So yesterday also the stock was down almost by 3%, and today also it is down by 5%. Now 525, this is the strong support zone, if we say. So anytime closing below can see more downside till the levels of 500 and 525. Still we would recommend to be in short position if any F&O trader is there. One can keep a stop loss of today's high only, that is around 550, and keep your shorts on hold.
Alright, JSPL there on the charts, but let's move on then to the next stock that's in the spotlight and discuss what the outlook is when it comes to, I guess, Zomato. So let's pull up the latest note that's come out from JM Financial. They've got an upside rating on the stock. They've got a target price of about 100 rupees. The latest note declares that there's been a lot of to and fro when it comes to ONDC and what it's going to do to the food delivery market. Now, they believe that ONDC can disrupt the online food delivery market. Yes, it has the potential to emerge as a formidable player within the space, a third player in a duopoly market. And there are also comparisons that are being made with UPI. But JM Financial believes that absolutely the channel checks that have been taken completely negate all of these facts. They believe that as of now, the apple-to-apple comparison suggests that the commission rates of food techs and ONDC are very different as of now. They believe that in terms of their commissions, that comes in. You can't really compare the two. They're also saying that food techs partially fund customer delivery costs. That cost for ONDC is going to be a huge question mark as to who is going to bear that, and assuming that restaurants decide to offer free delivery to customers, their own earning as well as proportionality will get impacted unless they have their own fleet, unless they have their own cost of operations as well. They also believe that restaurants have room to offer incremental discounts on ONDC, but the gap is going to narrow once the seller app raises commission. So that's the latest report coming in from JM Financial on Zomato.
Okay, that's all about Zomato. Keeping an eye out on that one. Talking about the next stock on the charts, and MTAR Tech. Sumit, what should we be expecting from this one? Is it a buy call coming in from you as well?
Yes, it is a buy call. Almost a span of the 12 to 14 months, the stock is able to cross its resistance zone of 1800 levels. From last few sessions was in the consolidation, but in today's session, it is giving the good breakout with the volume also, and the stock is almost up by 3 to 4%. So we are expecting more upside till the level 2174 and 2318. One can keep a stop loss of 1800, which is the previous resistance zone. So just add and utilize the dips also.
Utilize the dips in MTAR Tech, and that stock continues to remain a buzz. Meantime, let's discuss other newsmakers, Vamakshi, and you've got Credit Access on your radar.
Well, yes, in fact, the stock has hit an all-time high today after the company reported a strong set of numbers in the fourth quarter. The company reported a healthy AUM at almost 21,000 crores, an uptick of 27% on a year-on-year basis. Disbursements were also quite high, 7,171 crores. That is an uptick of almost 24%. And this in turn has actually led to a nearly 34% year-on-year growth as far as the net interest income is concerned. When we look at the NIMs of the company, that have improved by almost 90 basis points on a year-on-year basis to 12.2%, and the management said that they are expecting the NIMs to sustain at this level. Apart from that, driven by merger-related line items that are included in other income, steady operating expenses, the net profit has actually gone up sharply by almost 82% on a year-on-year basis. As we look at the asset quality, the gross stage 3 assets have actually declined on a sequential basis from 1.48% to 1.21%. And given all these factors, we actually have a brokerage note that came in from Nomura. They've actually maintained a buy rating on credit access, but also increased their target price from 1,300 to 1,350 per share. So largely a strong set of numbers is the reason why credit access is up and away in trade today at trading at the day's highest point as of now, up 10%.
Trading at the day's highest point. Also, let's not forget it's trading at a 52-week high as well. But so with on the charts, credit access, how is this one looking like today? Surely it's seen a very sharp up move. Earnings is a factor that is coming into play there. But on the charts, would you say it's a good time to buy?
A fresh buy we would not recommend, but the dips one can accumulate because the stock is already up by almost 10% plus today. So just a 4 to 5 session prior, we have recommended on our channel also that time it was trading around the levels of 1060, and today on the basis of the results also the stock has given a good up move. So if anybody has added, we would just recommend to hold it for the 1350 levels and 1470 levels also. So if anybody is holding, we would just advise to trail your SL. Priorly the SL was 990, and now one can keep a trailing SL of 1090. So it is advisable to hold.
All right, advisable to hold. Those are some levels to track on credit access. Moving right on then, let's discuss a smart mover in trade today. And Harsh, that's Amber Enterprises.
Well, yes, solid set of numbers, right, Avan? So what we're seeing is your revenues expanded 55% on a year-on-year basis, come in above that 3,000 crore mark quarterly Q4. And we're seeing an even larger expansion when I'm looking at it for the full year FY23, 65%. Really impressive there in terms of the full year numbers as well. When I'm looking at operating EBITDA, it's come in at 204 crore versus the 133 crore number same time last year. 54% expansion on that front where Q4 is concerned. And margins have therefore gone up by around 10 bips or so. 6.9% is where the FY23 Q4 margins have come, as is the FY23 full year margins as well. In fact, 10 bips lower than the FY22 margin. When I'm looking largely at profitability, you're seeing a surge as well. Of course, profits come in at 108 crore for Q4 versus the 59 crore number same time last year, 82% higher. And even when I'm looking at it on a full year basis, a solid 47% growth on a year-on-year basis for FY23. The stock flying away, of course, but it had hit 2220 in early trade before cooling off. It's still 12% higher in trade today.
That is Amber Enterprises. Let's move on and talk about Exide on the charts then, Sumit. And what are the charts indicating for this one? A very good run-up that we've seen in the last 1 year, up almost 41%. How much more upside?
It is a pure technical play. Weekly highest closing in the last 2 years, also a flag and pole in the weekly time frame. So we would just advise to add for the medium to long term. We are expecting a massive returns in next few months, or we can say. So upside, we are expecting the target of 274 and 308. One can keep a stop loss of 180. So just add and utilize all the dips.
Okay, that's the stock that Sumeet is tracking. Meantime, Vinny, let's discuss more numbers.
Absolutely, and Paris Defense, Avan, this one too is in focus. And when you look at the numbers that have come in, a mild growth in terms of the revenue, 7% uptick on a year-on-year basis. Operating performance, a bit weakness that is coming in for this one as well. EBITDA down by 6%, margins are seeing a contraction of around 300 basis points. EBITDA margins at 26.2% as well versus 29.5% last year. Profits of the company have remained largely flattish on a year-on basis, 12 crores versus 10 crores. So something that is impacting the stock seems like the operational performance weakness. We're keeping an eye out on this one. As of now, trading with cuts of 0.7% in trade hour.
All right, let's discuss the other stock that's on the charts then. And Tanla Platforms, the stock is holding out very smartly in today's trading session, Sumeet. Would you wait for a bit of a cool off before buying into the stock as it's close to its 52-week high?
Yeah, a month back it has given a trend line breakout. After a long time, the stock has fell from almost 2000 levels till the 500 levels. So it is a perfect reversal candidate. And with the fresh BO today the stock is almost by the 10% up. One can accumulate for the levels of 950 to 1070. One can keep a stop loss of 650 from almost the last 10 to 12 session was in the flat consolidation mode, but today it has given a good fresh breakout.
All right, keep tracking Tanla Platforms. That's the word coming in on the charts. Moving right on then, it clearly seems that the recent spate of flops is not doing anything for PVR Inox. Came out with its numbers. You did see a lot of one-offs as well in the quarter. That's largely on the back of the first quarter ever of the merged entity's performance. But CLSA has come out with their latest note on the stock. They've got a buy rating, but they've slashed the target price from 2,500 to 2,015. Now, they say that occupancy has been dragged by Bollywood's ongoing muted content performance. Several movies after the release of Pathan have really under-delivered. Going ahead, they believe that there's no paucity of movies releasing, but the quality of content, that's going to remain a key challenge, and that could drag PVR Inox's occupancies. They're also saying that there's no structural risk from OTT or streaming devices because there's a lot of, which have a lot of content, because a lot of content over there as well seems to be under-delivering. The shutdown as well of the screens is a little bit concerning. They're going to shut down 50 cinemas. They're optimistic, though, the management said in their conference call about the content lineup ahead across languages. So that is something as well that will be watched out for, as well as strong operational synergies over the next 18 to 24 months.
Okay, that's PVR Inox. But let's move on and talk about Marico on the chart. Sumit, this one is one of those FMCG names which has not done anything exciting in the last 1 year or participated in the run-up. Finally, is it time for Marico to start participating here?
If we see a weekly closing above the levels of 550, then only the fresh buying will be recommended. But if anybody has done the bottom fishing, that is the nearby zone of 400. Because if you will see the moment from the last February 2022 to till the date, it has a zone of 470 to 550. Every time it is getting the rejection from both resistance and the support. This time also the stock has given shown the run up from 470 to 550, and the same level it has got a rejection with an inverted hammer and follow up. So today a strong Marabazu candle is forming. Already the stock is down by 2%. So we are expecting more downside here. There is a small gap of 505 to 510 levels. We are expecting to be fulfilled there.
All right, watch out for Marico on the charts. Moving on then, LIC Housing Finance. Vamakshi, why are we discussing this one?
Well, Avan, a strong set of numbers have come in for this counter. When we look at the net interest income, that has seen an uptick of almost 22% on a year-on-year basis. When we look at the calculated NIMs as per CLSA, that have come in at almost 2.9%, which is the highest in the last 24 quarters. Provisions have decreased by almost 60% on a sequential basis. And overall, when we look at the PAT number, driven by a healthy NII growth, decline in the cost-income ratio, as well as lower credit cost, PAT has actually been reported at 1,180 crores, an uptick of almost 5.5% on a year-on-year basis. Asset quality for this counter has also improved sequentially. GNPA has declined from 4.7% to 4.41% in the fourth quarter. Brokerages have also come out with several reports, and most of the reports are appearing to be quite positive. In fact, they say that the company has posted a big beat after 2 consecutive big misses. Now, it is important to know that the stock had run up by almost 30% just before its numbers, but as a result, despite a strong set of numbers, we're seeing the stock languishing in trade down nearly 6%, as you can see.
Okay, let's move on and talk about Lincoln on the charts then. Sumit, not a one we discuss regularly, but what are you indicating and what are the charts indicating for this one then?
Yeah, it is a fast stock from the news also, so nobody discuss more about this chart. But if you will notice today, it has given a fresh breakout and it is a new lifetime high for the stock. It has today almost you can see it has given a 2 years highest volume. So stock is trading above the 50 SMA and 200 SMA. Need a close above the 410 levels on the weekly. Then one can add for the levels of 480 and 513 levels. We would try to visit the company also as it's based in Ahmedabad.
Alright, let's move right on then to the next newsmaker in trade. And at number 19, Harsh, Bank of Baroda, a result candidate.
Well, yes, in fact, declared a very strong set of numbers, Avan. Yesterday, we had the management on the channel today, which assured that the net interest margins for the bank, which have been going up, in fact, in a difficult deposit growth environment, will continue to remain stable through FY24. 3.31% is the NIM they clocked for FY23. They are expecting that number at the very least in FY24. They are expecting a 1% plus ROA number as well. Now, with regard to what brokerages are talking about, what CLSA believes is that they're still bullish on Bank of Baroda. In fact, they've hiked their target price as well. Now they've given it a target price of 225 versus the earlier target price of 210. They believe that ECL requirements are comforting. The bank clarified that 1% credit cost will factor in ECL requirements and there will be negligible slippages and that will continue. Macquarie, on the other hand, believes that they maintain their neutral rating on Bank of Baroda, more tempered coming through from Macquarie. $180 a share is what they kept their target price at. And they believe that credit costs are going to hold the key to maintaining profitability and ROAs for Bank of Baroda. So both those notes as well as commentary coming in from Bob.
Alright, keep an eye out on that candidate, but time for a very short break right here on Market Fatafat. Stay with us, the countdown continues.